The U.S. Federal Reserve is lowering interest rates for the first time in 4 years. That was just announced. CTV National's Renee Rodgers joins us live with more on what this means for Canadians. So tell us more about this rate cut. This is obviously really encouraging news, Renee.
It certainly is, hi, Lena. Yes, the U.S. Federal Reserve has slashed its key lending rate by 0.5 percentage point, which is in line with what economists were predicting, although on the higher side, economists thought it's either going to be between 1/4 to 0.5 percentage point. Well, the bank went more aggressive with that 0.5 percentage point cut, and it's the first cut in what is predicted to be a series of cuts after the rate climbed to a 2-decade high of 5.3%. So what went into this decision? Well, the Fed raises or cuts rates in response to two factors, and they are inflation and employment. And inflation fell to a 3-year low in August to around 2.5%, not quite to the Fed's 2% target, but still closer than it was. Also, over the past year, unemployment in the U.S. has been ticking higher. It's currently sitting at 4.2%. So basically, all of this has added up to the perfect recipe for a cut today, Lena. Jerome Powell, who is the chair of the Fed, is set to give a news conference that is expected to get underway any time now, and he'll be explaining what went into this decision a little bit further.
Okay, Renee, if you can stay with us for a moment, it's no secret that the central bank watches what the Fed does and then kind of follows suit. So what do you think this means for Canadians? A step in the right direction?
Essentially, yes. Economists are saying that this rate cut today will essentially pave the way for Canada to see further rate cuts. We know that the Bank of Canada already continued on a cutting cycle. Earlier this month, it delivered its third rate cut. Well, the U.S. has not begun to do that yet until today. And this is good news for Canada because the Bank of Canada does not want to stray too far from where the U.S. is when it comes to its policy rate. If it does, Governor Tiff Macklem says that could lead to a weaker Canadian dollar compared with the U.S. greenback. So essentially, by making that cut today, it gives Canada, the Bank of Canada, more room to further cut its own interest rate. Now, our next announcement from the Bank of Canada on the rate is coming October 23rd. So we will see then, Lena, whether or not today's announcement from south of the border has any effect on how far of a cut we could see next month.
Yeah, the inflation numbers look really good. Good news could be right around the corner. Renee Rodgers reporting live from our national newsroom. Thanks so much, Renee.